Welcome everybody to Kingmaker FX. Today I'll be teaching you some pattern that we use to trade effectively. Now this pattern, sometimes you might take a trade, a full buy setup, but you might be still in loss and be surprised. It breaks structure, give us a wake up schematic, blah blah stuff, and change of character. It's because you are not looking on the higher time frame pattern. This pattern most times occur on the H4 time frame. It occur on what time frame, please don't. But on the H4 time frame, it signifies a swing, or daily is a swing trend. So let's just jump into the pattern, and we have 5 patterns that we trade in Kingmaker Group, which are reliable and sustainable because they're built on supply and demand and they're tested and trusted. But on this YouTube channel, I'll be revealing only two of the pattern. Let's go into pattern 1. Now, market is on a downtrend, strong downtrend. Market came into a point or just pause a bit and will sell aggressively. Now, most times what market will do, market will come back, create a high, low, create a high. Now, it might be triple high, quadruple high, or a single strong high. Market will come again like this, maybe like this, and come into this place here, give you a fake sell, and what, boom, take you out. Now, look at the setup here. This high here, hunt liquidity and break the structure. But you might be surprised, why didn't he mitigate this zone and sell properly? What is happening is that this supply here is what pulling price. Then what is all this happening here? You might take some good sales here, yeah, but these all here are what? Liquidity. Liquidity is just simply stop loss. Stop loss is how brokers and the dealers make money, because stop loss are money. So when they just pull into the zone, you might not even get any confirmation here. You might just get a white off without a return to even the UTAD. And might get a what is, in fact, just enter here straight like this. We enter here straight. Look, we refine this our block and just enter here straight for a massive sell. Massive word sell to downside. So this my drawing is terrible. Let me show you on the this thing. It goes to you. So now you can see clearly. Let's start again for proper understanding. Market was in a downtrend. Created a base. You call this a base here. Now this pattern you call it drop base drop. I will not give full explanation, but my student understand this pattern very well. So price is down. Make a candle here with the engulfing and tank to the downside. It will tank to the downside. Now, what the market did the first time? It came here. It might even tap small of that of the order in this supply zone here. It tanked down like that. It tanked down again. Just all this is doing, just creating liquidity. Some people might call it a break of structure. Let's sell here. Let's sell here. Okay, sold. It came again. This low might be lower like this. We call it a break of structure, a UTAD, blah blah stuff. Let's sell here again. What did the price do? It came, we sell a bit, faking out, creating enough liquid because stop loss will be above here and enter our proper zone and what? Bam. Now, as price is coming down, look at what happened again. Some other block traders, some people say retail, not like retail. We are all retail traders here. And even though that block traders is still liquid, it's just about how you execute the trade. It doesn't matter. Because other block traders will be like, okay, this is one is another block here. This is inducement here. And it's right. This is a break of structure. What will happen? It will enter here. It might even just small consolidation, if you even do any consolidation, which I'm not even sure, and will tank down again. So the other block trader who is calling the trend line to the retail trader is also a victim to this again. So in Kingmaker FX, we help you understand different patterns. For mentorship and account management, remember to chat me directly on WhatsApp. Remember chat me directly on WhatsApp. So let's jump into the chat to see this properly on live example. This what happened this week. Welcome back to the chat. So to see that pattern, we see this week it happened. It happened on what? Crash 1000. It happened on what? Crash 1000. That pattern you see earlier on my slide, you can see it perfectly on Crash 1000. What happened here? Price is in a downtrend. Make a pause here. Give us a pause like just a a base here. This base is a supply zone. Here, the man tried to step in, supply push it up. So there are a lot of orders here. There are a lot of what? Orders here. There are a lot of what? Orders here that to push price down. So the broker make this schematic here. This work of schematic. Push price. Let me show you something. Push price. I know. Push price. Make this equal highs here. Now, after making the equal highs, price drops significantly. Now, it made this first high, push down, made this second high, push down. But there's something about this too high. This high is a weak high. Why is it a weak high? It failed to take out this low. Now, it came back, FTB first time back and pulled back. This high is also a weak high. Why is it a weak high? It failed to take out this low. So these both high are weak high. But if you don't understand, you place yourself here. Oh God, I don't know why my chart is flipping backwards. I'm taking it forward. Flipping backwards. So some people place the sell here. We'll see this order block here. You can see what happened. Market came, reacted a little bit and what tank to and went up and took all of them out. These two high here are all weak high. They failed to take out the previous low. So what do we do next? Once you see this pattern and you look above it and you see a base, you hold your peace. You will hold your peace. Those taking buys here, we know that this you won't take your profit here or here. You know that this buy here, we go and what clear the high. We go and what clear the high. So what do? You wait for price, just enter your base. Enter your base. You see, after price enter your base, what happened? You sell. Your first target will be the first visible low, internal low. Your first TP is this low here. A second TP, this equal low, then like that. Price will take out this low. Do you know what I'm saying? Yeah. So that's it here. That's one of our pattern. Let me show you this one on boom 300 so I'll be sure that this will work. We are not just trying to make money or just trying to bring something that does not work. I'll show you another on boom 300. Boom 300. Now welcome back. Now another example on boom 300. Now if you look at this price here, price has been tanking to the downside, tanking to the downside, and created this base here, this big base. This base is different from the other one. This whole area is a base. So that this was your last point of watch supply before price tanked to the downside. So what happened? Let's investigate our price chart here. So this one here, now what the price did, price came. Now somebody will be asking, why didn't I take care of my base? Yeah, you can sell from the side, but always look at what price. Look at what price carefully. This was the last point. This is the extreme, and from our studies, price most times respect what extreme. This one is an inducement. How will you know it's an inducement? What do you see? Equal highs. What do you see? What equal highs? Okay, let's investigate it critically. Let's investigate on each one time frame. Okay, this is the base actually. This is the base. That's candle. You might be wondering, why didn't I take this as my base? What would happen? Okay, H1 time frame. Price pull into the base. It's pulling to the base, and what do we expect? This high to take out this low to confirm that you have a what change of trend, because we have an extreme above. Normally price usually respect the extreme, but sometimes price might respect this one and what tank down. So we must take a confirmatory entry in base that is not in our extreme. Price came into the base, you can take this sell, but price failed to take out this low, and as price weak above this high and pull back in, just know that this is a trap. This is a what trap. So you see what price did? It came in, They didn't give it this and what take everybody out here, and came out to respect the extreme base. Respect the what extreme base, because you can see it clearly. Respect the extreme. You can see it. Where there's an extreme base, price 90% of the time respect base at extreme. I could see the equal highs here. Sorry. Equal highs here, just like that pattern I showed you. Now, the equal is above. Now, when you sell here, your first TP will be this equal lows here, and the second TP will be this low. Now, price came into this point and gave us this pullback here. If check on lower time frame, there was a schematic here, accumulation for a buy. But if you have seen this pattern already playing out, you won't take any buy here for a long. You know that this buy will not hold because it has touched a higher supply. So this demand here will not hold. This demand all liquidity. So people that buy here and see what happened to them, they were crushed out of the market. Let me go to H1 time frame, M15 time frame, choose something. See, some people call this a break of structure. A break of structure. Last point of demand. Last point of demand, and I could see here there's a Wyckoff here, Wyckoff accumulation, but we know that this Wyckoff accumulation will not hold. It might just hold for a little buy, but not for a big buy. Because why? Our HTF, our higher time frame, has showed us that price will tank. We tank 90% of the time. When price do this, it must go and clear this low. 90% of the time, price must go and what? Clear the low. So that's it. Price must go and what? Tank and clear this the 90% of the time. Let me show you an example where price didn't clear the low. Boom, 3,500 or 500. The same pattern. The price didn't clear the low, but it gave us a good sell, a very good sell for massive profit. Okay, let's do it again. So it happened on 500. You can see here, price creates a high before the base, and this high is what? Liquidity. This high, it must not be equal high. If the high is liquidity, what the price did, price read the high, came into our higher time frame base or order block, gave us an RTO, cleared the low. After I break this low, bearish pressure, give us an RTO. I told you normally your first TP is the first prominent internal low, and this is a light sell. This sell lasted for almost 5 days. This sell from this point to this point. So you're taking your first TP at this prominent internal low, then your second TP below is low, then your last TP. But price didn't get to this low. From here to this point, it's a good sell. It's a what? Good sell. 156 pips on crash, boom. 300, which is not volatile, it's not small pips. Use your risk to work on leverage on the trade and make a good trade out of it. So this is our pattern. We have 5 patterns. I'll be revealing the next one in the next video. Remember to like and subscribe for mentorship. For account management and signals, I'm available. Here we make trade easy, we make trade simple. Have a nice day. Cheers.